think it's important to recognize that the rally so far in 2019 hasn't taken us back to prior peaks pretty much anywhere. So throughout 2018, we had some very significant corrections outside of North America, in particular emerging markets and Europe, down something like 20, 25, in some cases 29, 30%. The United States levitated through much of that period until we hit the fall, and it became clear the economy there too would slow, and there were a variety of macro risks that spooked investors, and we declined almost 20% in a very brief period into Christmas Eve. So it essentially caught down to what other markets had already done. It also, in that corrective phase, really reduced investor confidence and set up the rally that we've seen early in 2019. So really, in the absence of recession developing, stocks were going to head higher for two reasons. First, while earnings are cooling, a lot of that's explained by the lack of another fiscal stimulus in 2019. So tax cuts in 2018 boosted earnings. That's not a repeatable thing for 2019, but investors understand that. We think you'll get something like single-digit growth in earnings. It's in our forecast. It appears to be the consensus. It's consistent with their economic outlook that we're running with. I think as importantly, you're pairing single-digit growth in earnings in 2019 and likely in 2020 with some of the most attractive valuation levels we've seen in several years. Now, the correction began from average valuation levels. I don't think they were high. I think they were completely consistent with underlying inflation, interest rates, and growth. But we've taken stocks down as much as 20 to 30% over the last year. And that's created, I think, very, very solid valuation conditions for future gains as long as the economy avoids recession and as long as growth in earnings of something like single digits actually is produced. We think that stocks should produce gains of high single digits over the next 12 months and perhaps even slightly above that in some of the emerging nations that were hit harder during 2018's correction.